What does a $4 trillion market cap on Nvidia signal to you?
Well, I guess it's another feather in the cap for Jensen Huang, another sort of global first. So that's all great, makes great headlines, etc. But coming back to taking a more realistic view on the outlook for AI at the moment, in terms of the infrastructure play, Nvidia remains the only play in town, doesn't it? It's an effective monopoly in terms of what it does. Intel, AMD, and others are trying to catch up, but Nvidia's got such a commanding lead in terms of time, in terms of technology. It's hard to see how any of them can realistically challenge them in a meaningful way, you know, and on a short-term view. So it's got a market to itself at a time when the big tech platforms in the States continue to spend humongous levels of CapEx. So based on our latest data, if you look at the big four platforms, so really that's Microsoft, Meta, Amazon, and Google, they're spending combined CapEx of over $300 billion this year. So, you know, it's a fantastic setup. This will go back in the stock market and economic history books. But this is all known news. And I would say, arguably, the risk profile and the uncertainties that Nvidia faces on a medium-term view, if we look at it today versus where they were maybe 12 months ago, it's actually a little bit higher incrementally. I'm not saying they're about to fall off a cliff or they're facing, you know, dramatic uncertainty in the near term. But as you know, many of their end customers are looking to design their own chips. I think whilst they have a commanding lead, the competition is slowly catching up. There's also the uncertainty about their China business. As you know, we've had the bans on the H20 that caused a write-down of, you know, $5–6 billion in terms of inventory. So again, I think on the margin, in terms of incremental risks and uncertainties, I would actually argue they are greater today than they were. So why is this stock trading at an all-time high at the moment? I think there have been a number of short-term factors which have benefited them. Obviously, we've seen, the concerns on tariffs have eased relative to where they were earlier in the year, so that's helped risk-on sentiment. We've obviously seen President Trump maybe trying to, use the right language here, persuade the Fed to cut rates. So obviously that is normally good for markets. It's been risk-on environment driven by some short-term factors. And just very briefly, Jensen Huang is due to take a visit to China. He's going to meet China's premier next week. Again, I think that's a short-term factor which may well drive risk-on sentiment. But as I said, taking a step back from the noise and the headlines, I would argue, or I do argue, that the risk outlook for this company and the uncertainties are actually marginally greater today. So, yeah, I think we'll have to wait and see how things evolve over the coming year or two.